aboard Sandip Sabharwal, who's joining us this morning. And Sandip, hi morning. Thanks so much for joining us, and lots of news flow to discuss, stock specific and otherwise as well. But let's begin by getting your view on where you see the markets headed today, the kind of fillip that we've seen on the Nifty on Friday. Do you believe that is sustainable today? And the sectors that have been leading over the course of last week, do you believe they'll continue to lead this week as well?
Yes, I think so because the RBI actions were quite significant. And in fact, many other sectors like auto would also have participated much more because they are very strong beneficiaries of the easing liquidity and rate cut cycle, but for the rare magnets issue. Otherwise, the autos would have done much better than what they did on Friday. And I think if that sector remains subdued due to concerns around these supplies and apparent shutdowns, etc. So I think at that time we could get opportunities to buy these stocks. Otherwise, what RBI has delivered combined with the kind of tax breaks which the government has given for the middle class this year, higher government spending, overall lower inflation. So I think it's a perfect combination for revival in economic growth. And as that plays out, market should also do well.
Sandip, the one point that I wanted to discuss is that this big bazooka that they've given, not just the policy rate cut, but even for the MFI sector, because this is one space within financials which did have quite a fair bit of stress. Tell me, how does this help the MFI sector, and would you be an investor here at all?
I think so. Most of the MFI focused companies are trading at somewhat distressed valuations, and there were two comments specifically. One, that the RBI clearly stated that they see easing stress on the unsecured loan book. So that is overall good for the financial sector, especially for NBFCs and more specifically for MFIs. Although there would be some concerns related to some state government bringing out new laws, etc., where I think some specific companies could get impacted. So that has to be more minutely analyzed. But that comment combined with the fact that MFI lenders have the ability to diversify into other segments and still retain the MFI categorization, I think that's a significant positive because then risk can be maintained better in the balance sheet. So I think overall it's quite positive for the MFI sector, even for the gold lenders where the norms have been eased. So I think something has been given to everyone.
Sandeep, if you can just highlight some of your top favorites within the financial space. Well, of course, it's not just the MFIs, the gold finances. It's actually great news for many of these stocks. But which are your top bets within the financial space?
I think the larger banks will continue to do well, which include ICICI, HDFC, Axis, Kotak, etc. I think some of the PSU banks could see a revival. So because of the sheer underperformance, we have actually recently added into SBI also in our portfolios. The other part which could benefit, obviously, the NBFCs benefit much more in a significant easing cycle than the banks. So NBFCs, people have a wide choice from what we ourselves own are stocks like Manappuram, L&T Finance, Mahindra Financial, Bajaj Finance, etc. among the NBFCs. But then there are others also which will benefit. So investors have a wide choice. But overall for the NBFC sector, this what RBI has been doing over the last few months is a much more significant positive than banks per se, because most large banks have 40-45% CASA deposits where the costing doesn't reduce so much immediately. And it's more or less fixed. Although most banks have cut rates by 25 basis points. But for NBFCs, which tend to be bulk borrowers, significant monetary easing is much more positive.
It's literally been not just in the realty pack, where is it that you find comfort to buy a fresh or add in, or even some of the, HFCs, for instance? Maybe that's a better play.
I like diversified NBFCs better, so I think I would focus on those because only focused housing finance companies will continue to face more and more margin pressures as the liquidity eases. So I think it's better to be in the diversified space. On the real estate sector, obviously this benefits the real estate sector. But as of now, I'm not finding comfort in buying into any of these real estate companies at these valuations because the run-ups in the near term has been very substantial. Be it the market leader like something like DLF already valued from 600 odd to I think 850, 880 something. So I think the rallies over the last 1 or 2 months in most of the real estate counters has been so significant. It's tough to find value. But on correction, we could still evaluate.
Of these real estate names, but I also want to get in your view, Chandan, on
process where both the companies will actually see what they can do best. But it's a big issue that is now emerging for the auto companies specifically, with the shortage of critical rare earth magnets rather coming in from China. What's your sense that how severe this could actually impact the Indian auto industry and other sectors as well, given the fact we have a lot of reliability on China when it comes to select magnets?
So I think there's a lot of news flow on where the impacts could be. I think the direct impact is more on the auto side immediately, but apparently these go into a whole host of electronics, etc. So now it will depend on how fast. So it's not a question of supply. The supply is there. The supply is not been given. So that is the issue. So whether it will get resolved or not, we don't know. Overnight, there's been some news flow that China has approved supplies to some European and US customers. So the point is India going to be singled out, or is this issue going to be resolved? So I think there are too many moving pieces. So we need to watch out for that. EVs apparently will be much more impacted. So to that extent, companies which have a bigger EV portfolio or a greater reliance on EVs only, or two-wheeler EV companies, etc., those might be impacted more if it doesn't get resolved over the next 4 to 6 weeks.
Okay, that's that on the rare earth magnets issue. Let's see how it transpires, given that China and US are going to be talking in London. So let's see whether something comes out of those trade negotiations. Lower taxes and good monsoon as well, and an early onset at that. We've discussed autos as well as homes, but what others could be the trickle-down effect of a consumption fillip if it were to come in, given that the combination looks picture perfect right now?
I think lower interest rates like these directly benefit infrastructure construction companies, and I believe that many of those stocks are still significantly below 52-week highs. So I think that is one sector which definitely benefits due to easing liquidity and lower interest rates, because their clients can fund more projects, their balance sheets which have debt, the rates get reduced. So I think that's one sector. And secondly, there'll definitely be a revival in consumer durable demand as we go into the festival season this time, because it's been subdued for 2-3 years. And I think with this kind of combination, there has to be a revival. So I think all the consumer durable names could see an uptick going forward.
All right, but Sandip, also give us some sense that how do you see the latest news flow on MCX and how can this actually impact the fundamentals of the company as the company announces the launch of equity derivatives, where they will generate contracts to generators, distribution companies and large customers to hedge against the price volatility and manage price risk by enhancing the efficiency in the power market. Give us some sense that how will it matter to MCX since the stock is already at an all-time high?
Yeah, so I think the exchanges have been moving up steadily across the board as the unlisted price of the NSE stock also keeps on moving up. So I think that's in line with that. Valuations obviously are excessive, but uh, incrementally it's a positive move because it is a good segment to be in. I think electricity derivatives will only grow going forward as different sources of supply come in with varied supply intervals, like solar will be available only during the day, then there'll be solar storage also coming up. So I think that will impact how it behaves. So unlike thermal, which is a regular supply, all other sources of renewable energy have periodicity. So that will make the overall electricity trading grow. So whoever gets into this segment has to be a beneficiary. Initial contribution to the overall profitability, etc., might be low, but it's a segment which could grow.
So much news flow when it comes to the defense pack, right? Even over the weekend, you've got news that BEL has inked that MOU with Tata Electronics now. They're looking to explore opportunities in area of semiconductors. There was also news on Garden Reach. They've signed an MOU with Sweden, with Denmark for now marine systems and cruise segment. But do you think that defense as a sector could perhaps be priced to perfection right now, or do you think there's still value on the table?
I think money flow will continue into this sector because as an overall part of the market, this is still a small market. But that, like you rightly said, many companies have become very excessively valued, especially uh, I think many of the shipyard companies, or uh, for that matter, many of the other defense companies, where some of these companies also have guided for just 7-10% growth, and then still the valuations have become 80-90 times. So it's and on the private sector side, the frenzy, whoever is related to defense, is even much more greater. So I think the valuations on the private sector defense companies have gone totally, completely out of sync with uh, what the actual valuation should be. So I think people need to be careful. They need to time their entries, but participate in the defense theme, but at the right price, because we've seen that in the past, if you got in at the wrong price, sometimes these stocks could correct as much as 50% also if there's a correction.
That's Sandeep's take on some of these defense names. So while we are talking about Garden Reach, this stock is also going to be in focus today as the Indian Navy has commissioned the first anti-submarine warfare shallow watercraft. We will also look at some of the recent MOUs and the order wins that the company has secured so far.
Can you also help us with your take on GRSE? Because yes, some of these counters have been doing well, but any take by you on that? How do you see the growth for the company as FY26 is expected to be the peak revenue year, while FY27 is potentially continue to see a strong momentum?
So while evaluating any stock, you have to understand what is built in and what is not built into the price. So I think many of these shipyard companies have run way ahead of fundamentals. So people need to be careful at what price they are buying. Directionally, the story for shipyards is strong, but then we cannot keep buy them at 80, 90 P or any sort of absurd price earning ratio. So I mean, we need to be careful at what price we buy.
Sandeep, what do you think the texture of the market is going to be here? You know, we were just discussing the other day that mutual funds are still sitting on a whole pile of cash. The scenario right now is perfect for all that money to pour in right now, especially because of what's happening in the developed world as well. Do you think it's going to be more of an across the board move, across sectors that we will see a move up? Or do you think it's going to be this versus that kind of move? And then what do you think is going to be the composition of where you see leadership and where you see underperformance?
I think it will be across the board because initially the direct beneficiaries of the rate cut cycle will move up along with the fancied sectors, and then there'll be a catch up of those sectors which have not participated also because there'll be a left out feeling among many investors. I think it will be across the board. Some sectors which are direct beneficiaries of rate cut cycle policy changes benefit immediately, and for the others, it will be more of trickle down.
Sandeep, good to have you on the show, and here's fingers crossed. The